Welcome back, everybody. It's Gabe Velasquez here with you from TransparentTradingSolutions.com. Today's topic is order flow. What does that mean, and how will that affect your trading? That's obviously why we do these things, to try to help you understand the markets a little bit better. So, again, just a little background. I come from I've been in the business for 35 years. I did, I was a broker for a little while, and then I went to the sell side of the business. And so I was witness to all of these transformations through the years with the internet and so forth. And so let's talk about order flow, what that means, and how it is important for you to understand how the markets work. One of the things that, there are a lot of people coming into trading now. In fact, when I go out about town, it's interesting. Everybody, when they know what I'm doing, asks me about the market. So it seems like everybody's trading. But the key is you have to have an edge. And an edge means that you have to understand how the markets work. So order flow, very basic concept. Let's start there. Every buyer has to have a seller. That's called price discovery. Just like with any other buy and sell, if you buy real estate, somebody puts a house on the market, wants a price, that would be the seller. A buyer has to come along and agree with that price, and then they go to escrow. Same thing happens in stocks. Stocks, however, are very liquid and they trade in milliseconds, and there's obviously a ton of shares being traded, but the same kind of concept happens every day in trading. So what happens is, let's say institutions have a lot of shares to sell. Well, what they need to do is, because they have to have matching orders, they need to have somebody on the other side of that transaction. And so they create this liquidity by either running up a stock or selling a stock. If they want to buy it cheap, they would create an environment where everybody kind of panics out of the stock and have to sell the stock. Well, they would be on the other side of that trade. So that's the first concept you need to understand. So what that tells you is, as a new trader, is don't get caught up in the momentum. Yes, it can keep going, but as we know, and if you've already experienced this, that can be very costly. It's better if you have a very strong edge that gets you to buy when people are selling and gets you to sell when people are buying. That's the first concept, right? So the matching orders concept is something very important. Secondly, selling order flow, which is, again, we just had congressional hearings about this. What does that mean? Well, when you go through a brokerage firm, your order is handled various ways. So when you place an order, and depending on the type of order it is, it's got to be matched. Just like, again, right? We just talked about this. It's got to be matched. So what does that mean? Well, they can, if they're a broker and they're clearing themselves, they'll find, somebody to match the order and match your order up with somebody else's order. However, what you've heard now is there's actually people out there that want to have your order, right? That's called selling order flow. They want to have your order. Why do they want that? Well, first off, they can make money from the spread between the bid and the ask. So if they do a huge amount of volume every day, they can make a lot of money. That's only one concept. What you don't hear about is the second concept, which kind of ties into what I just talked about, is if you have order flow coming to you, you know exactly what people are doing. You can see the orders coming in. And let's face it, when people are chasing a stock, that's typically the end of a run. And so if you have the ability to see the order flow, that is very valuable information for a lot of these market makers. And so that's why you have to be very careful. Now, the other question is, where do you find that order flow? Well, if it were that easy to get, everybody would be having it. So the charts is really where you need to focus your attention. That, in fact, if you understand how to look at charts through order flow, that is where your edge is. And that takes a little bit of doing, right? So to wrap this up, you've got matching orders, buying and selling. Step one, you have to understand somebody's gonna, and by the way, when a stock rallies up and you have, like, for instance, I think GameStop peaked close to, again, close to $500 a share. Somebody bought it there, somebody sold it there. You know how that turned out, right? Now, you're going to say, well, what if I bought it at 200? Great. If you bought it at 200, the next question is, where did you sell it, right? And so understanding where to buy and sell, understanding order flow, and understanding this matching orders concept may help you, but you got to have an edge, and you have to understand how this works as a starting point, okay? So hopefully that helps. I will talk to you guys soon. Take care, everybody. Have a great week.